It's all yours, Corman. Give me a second.
Okay, cool deal. Hey, everybody. All right, so tonight I'm going to cover mostly stuff that's not on the Forex Factory calendar solely because I covered it last week, and then you guys can go through, read it, and if you have any questions, you can let me know. The most important thing about the Forex Factory calendar is to remember that we do have a speech from Jerome Powell tomorrow. So aside from that, the stimulus package that we've been talking about, that's been in the works, this will be the third stimulus package. They are currently working now to get that passed in the House. And once that gets passed, then there will be another stimulus check in the mail or direct deposited into bank accounts all across the US. So the biggest thing, again, to kind of reiterate about these stimulus packages is that when these stimulus packages are created, when money is being printed, always remember that this is going to be devaluing the dollar. Every time money is printed, there's money that's being printed behind the scenes that we don't know about. Just as being like a retail lay person, average citizen. But banks get money overnight. There's money that needs to be printed to help fund the government overnight, to help fund government programs overnight. So just always keep that in mind, that these things are always going to be affecting the value of the dollar. So as a conscious trader, knowing what you know, knowing what I just told you, when you get this stimulus check, know that that money needs to be put towards something that is going to help increase or maintain its value. So that money going into like a checking account or savings account and just sitting there, you're actually losing money whenever you do that. So just make sure you keep that in mind. That's some of the stuff that we're going to talk about tonight as well. Kind of shifting gears, still talking about the government and investing. So over the weekend, a little bit of last week, but over the weekend mostly, we got messages, tweets from Elon Musk about Bitcoin. Janet Yellen has come out and issued her warning about Bitcoin. So we've seen Bitcoin's price fluctuate a little bit. I haven't looked at it lately. I know I'm not sharing my screen. I will share my screen in a second. So I haven't looked at the the index for Bitcoin since Friday, but the market right now for Bitcoin is still extremely greedy. There is about, on the index for Bitcoin, it's like at 94 right now. So on a scale of 0 to 10, Bitcoin is extremely greedy. That means that people are really putting money into Bitcoin. There's not really a lot of fear in the crypto market right now. What you're seeing is a lot of people taking profits and just trying to reposition themselves to get in at a better price or to just get back into the market, period. So I want you to keep that in mind also. All right. So I had a couple of things I wanted to show you guys. Webull, we talked about it a little bit last week. Robinhood, in and of itself, we talked about it a little bit when they were having their issues, but these are two platforms that you can use outside of Cash App that will help you to get into stock trading. And when we're talking about stock trading, I really want you guys to know and really have an understanding of like everything that we're trying to do here for you guys, everything we're trying to create, because stocks is just an additional leg, an additional stream of income for you guys. So if you don't have something to take notes with, I am wanting you guys to get something now to take notes. If you already have some stuff to take notes with, cool. But we're just going to kind of talk through this because I realize I'm giving you guys a lot of information and I want you guys to be able to like use this information and really apply it to your lives in a efficient manner. So when we talked about stocks last week, we talked about it just in general, what stocks were. But you have to realize that trading stocks and being involved in the stock market is like trading assets or being a part of an asset market. So what are the goals for your assets? I want you guys to think about that. When you are putting your money into a forex trade, we're all expecting to be profitable, but what are you going to do with those profits? What is your goal for the profits that you make in forex? I want you to think and translate that also into stocks. Whenever you're buying your stocks, what is your goal with either the percent of increase that you get from a stock price or with what you get from the dividends that the company is going to be paying you either every quarter, every month, or every year, however often they pay them out. So for me, here's a mindset thing that I had to get over and truly think about. So I used to, with my last company that I worked with, I didn't like going to work. And I wanted to quit my job because of my boss, my schedule, those types of things. Then I just by chance happened to meet someone who was friends with a billionaire and told me they felt that it would be beneficial for me to talk to this person to truly get like a grasp of my life and what was going on. So after talking to this person, they told me to love my job, wake up and go to work, get paid, and then stop. Stop, pay God, pay myself, pay bills, and then invest. And then essentially what I was being told at that point in time was to use my job as leverage for the money. So my job should be paying for my assets. And then my assets should be paying for my expenses. And so that's where the true freedom comes from. The freedom comes from using my money that I earn at work, sending them off like little soldiers. If you follow me on Facebook, you saw my post where, you know, I talk about talking to my money every morning, talking to my account, sending them off, you know, sending my dollars off, hoping they bring back friends and, you know, that sort of thing. That's what I'm talking about. Like using that money that I worked so hard for to then go out and work for me. And then that money is going to be put into assets. Those assets are going to pay me. And then I don't have to ever worry about my time because I'm earning it back through my assets. And then once I've built up my assets, I should never take on a liability that an asset can't pay for. So that's how you get out of the rat's race. That's how you kind of think like essentially the wealthy think. So I want to kind of like get you guys to understand also like what the business climate is like in America. This is all tied into stocks. I promise we're getting there. So most of the wealth in America has been passed down. So if you think about like how we came to be where we are now in America, all the wealth was passed down from somebody. So it wasn't really set up for like minority wealth. So we have to follow the blueprint. Essentially, we've been given a blueprint. We have to understand that we have to get out of the consumer mindset. Like it feels good whenever you have money and you're able to buy things that you never thought that you would be able to touch before. But in order to ensure that you stay in a position in life where you can maintain, and then you know that your kids are good, and then that their kids are going to be good, like you have to get out of the consumer mindset and then switch over and seek knowledge. Another thing about where we are in life now is that to come to be here, there had to be a lack of knowledge somewhere. So knowledge had to be held back from certain people. There again, I had a post and I talked about the lion and the impala. So the lion can't teach the impala what they do to stalk them out, or else the lion's not going to eat. Somebody has to be the prey. And so in situations like this, it's a matter of making sure that you understand how the system works. You understand that you have to get out of the consumer mindset. And when you do those two things, then you're able to actually build wealth. Most people that I knew of growing up, for the most part, learned about money from a place of scarcity. So they learned about money, from hearing their parents say that they couldn't have or didn't have or wasn't going to be able to have. And so being flashy with money is almost a way of like feeling good because you knew as a kid you couldn't have it. But that consumer mindset is definitely to the detriment of our culture, to the detriment of future generations. And if we want to talk about breaking generational curses and just being that person who breaks out for our family, we have to shift that mindset. Shift it to the mindset, of abundance and possibility, and know that, money isn't scarce. Money is everywhere. You can create money. You can go and get money like at the snap of a finger. You can pick up your phone now, put in a forex trade, and have dollars in your pocket. And then coming from the place of scarcity, know that going to where we're wanting to go, we all want to be millionaires and billionaires. We want to grow our wealth. We have to be disciplined now. So Mr. Levels talks about risk management, talks about being disciplined with our trades. If you're not disciplined now, you're definitely not going to be disciplined with thousands and millions and billions of dollars. Because if you sit there and you say, oh, I have $1,000 in my account, I'm just going to put in this trade and see how it does, and you just let the trade run with no stop loss, no take profit, that's not discipline at all. That's just recklessness. That's gambling. You're going to do the same thing if you have $1 million, because you're going to be like, oh, I got $1 million in my account, I'm just about to see what's going to happen. No, don't do that, because essentially your access to things, the more money you have, becomes greater. And then the presence of those things and just the abundance of it around you will end up destroying you, because you lose focus, you lose sight of what you're supposed to be doing. So 3 things I want you guys to write down or take note of, either currently or on the replay if you didn't have enough time to get your writing materials. 3 things that I learned from the billionaire, 3 things that wealthy people do. They stop trading their time for money. So essentially what the billionaire told me was to make sure that I was putting my working money into assets so that my assets turned around and paid me and helped to free up my time. Eventually, when my assets are able to pay for all of my liabilities, for all of my bills, then I'm in a good spot. I'm in a really good spot if my assets can do that for me. So get to the point where you can stop trading your time for money, give value to people, and let your money work for you. And how can you do that? Either the stock market, real estate, or own a business. So in order to get to that place, you need to know what your freedom price is. So what is a freedom price? It's your budget. This is one reason why it doesn't matter if you are in debt, you have no debt, if you want to buy a car, whatever the case may be, everybody needs to have a budget because everybody needs to know where every dollar is going. It might not feel or seem like it's that important, but it's super important to know where every dollar is going so that you can be conscious of your pockets. You can know where to shift money around to build assets. And it just fiscally is responsible. So to kind of tie all of that together for you guys, I know what my freedom price is. So I have a budget and I know where every dollar is going every month. And my Verizon bill is like $125 a month. So I know how many hours I have to work at my job to make sure that my Verizon bill is taken care of. But another thing that I can do is think, okay, I have a Verizon bill. I own a Samsung. I have Spectrum as my cable internet company and Duke Energy. So why not make them pay for my bills? So over time, I can put money into Verizon stock. And when I put money into their stock, I accrue shares. I start earning more and more shares. And the more shares I have, the more dividend I get paid every quarter. So now I'm at the point where Verizon pays my cell phone bill for me at least 3 or 4 times a year. So that's money and that's hours that I've freed up. So if I know, as an example, it takes 5 hours for me to pay my Verizon bill, that's 5 hours Verizon freed up for me because they pay my cell phone bill. Duke Energy, I've owned Duke Energy now for about 10 years. My Duke Energy bills aren't that much, but I own enough shares where Duke pays my power bill. Well, they used to pay my power bill. I have to get more shares for them to pay my power bill where I live now. But in my old apartment, Duke paid my power bill for 6 months out of the year just because I held the stock and they paid dividend. That dividend paid my bills. So when I asked the question earlier of what is the goal for your assets, the goal for my assets, the goal for my stocks are to have enough shares so that the dividends pay the bills for me. So what I want you guys to do, I'm gonna give you guys some homework. I want you guys to find out what your freedom price is. So I want you to go through, I want you to write down your bills. You don't have to write down the exact amount, like down to the penny yet. You will need to at some point, but for right now, I want you guys to write down your bills. So write down rent or mortgage, and if it's to a bank, write down the bank beside of it. If it's to a company, like a leasing company, if you don't know who it is or who owns that company, just write down the name of your apartment complex or wherever you live. Your power company, your cell phone company, what type of phone you have. I want you to write down all of those things. And I want you to look at how many of those companies are actually traded on the market. And for stocks, a good goal could be to own shares of those companies so that they are paying that bill for you. For me, I found it advantageous to do that because why not? Why not be able to walk around and say, well, Verizon pays my cell phone bill for the whole year. I don't have to pay my cell phone bill. You literally would just take your dividend checks and pay your cell phone bill 3 or 4 months at a time. So, yeah, I want you guys to come up with your freedom price. So essentially what we're going to be doing in that is coming up and creating a budget over time, because I want you guys to know and figure out where every dollar is going and how you're going to be able to maximize your investing power to shift your assets to become more powerful, and then pay off your liabilities and overcome your liabilities, so that that way you're freeing up time at work. And you can say, okay, if it takes me, 50 hours at my job to pay all of my bills, you can start chipping away at that 50 hours. And then you can say, well, I'm down to 0. So I can essentially kiss my job goodbye if that's what you want to do. All right. So now we're going to shift into stocks a little bit more. I talked about dividends with you just now. So companies pay those dividends quarterly. They pay them monthly, either twice a year, or they pay them yearly. So the important thing to know about dividends is that the more shares that you hold of a company, you get paid either a percentage or you get paid a fixed amount per share. And that's of the outstanding shares that they have on the market. So hold your shares. Getting paid a dividend is like a thank you for holding the shares. The company is actually paying you out of their profits that they got, to say, thank you for holding our shares. Here you go. Thanks for holding. We hope you hold them, through the next quarter and see us through, whatever expansion or growth that they're going through. One company that I own that I felt would be a good company to share with you guys is APLE. It's a really good company if you want to get into real estate, but you don't actually want to buy houses or flip houses just yet. There are several real estate investment trust companies out there. Some of them are good, some of them aren't good. I've gone through the last year trying to really find some good ones for the team. I've taken losses on some of them that didn't have like a true or a solid of a foundation as they thought that they had because of COVID. And that's one thing that I was, that last year, I'll just put it like that. That's one thing that last year really taught investors, is that a lot of these companies weren't truly solid companies. If you're looking to get into real estate trust and you want to invest into real estate, but you don't want to buy real estate, as in the example I just made, APLE is a good company. Fundrise is a really good company if you want to put like $500 to $1,000 in and invest in corporate businesses. Just make sure that whatever company you decide to go with, look at their portfolio. So all of them will have a portfolio online, and you will be able to see what they own. Since I have it up, we can look at Fundrise really quick. So you can see what their investments are. If they have apartments, if they have dormitories, if they have, let's see, like some corporate businesses. So they do have corporate assets out there. And when I say corporate assets, if you guys remember me talking about how the land that Walmarts and CVS stores and stuff sit on, how they don't actually own the land, they just own the building. And then sometimes they don't even own the actual building, they just license the building. It's that. So those are also ways that these companies can kind of package real estate in. I like Fundrise because it's apartments. They do have some corporate stuff in there. And you can just look through, see everything that they're invested in. they have different packages and different setups for their real estate investments that makes them a really good company to get into. But always make sure that the portfolio that the company has, if you want to do this, is pretty mixed. So that way you kind of protect yourself should the housing market, take a dip, should the corporate market take a dip like it did last year with COVID, you're kind of protected. So like a good 60-40 or 50-50 mix is good there. And all right, so now I'm going to talk to you guys about one more thing because I wrote down so many things I want to talk to you guys about tonight. But I don't want to overload. So with these real estate investment trusts, there are several other ways you can go about investing. So you can buy the stock. APLE is a stock you can check out. You can actually go to Fundrise, but then they have ETFs. So an ETF is where in the marketplace, they actually group together stocks for you. So they'll put together a group of companies that either like they do the same thing or they sell the same thing, or they're kind of grouped together in the same asset class, either their technology or their banking or healthcare. So that's a really good way for you guys. So when I was telling you guys last week about picking stocks and how to find them, if you're like, I don't remember anything she said, I have no clue, and I don't feel like going back to the Zoom call and watching it, all you need to do, if you want to find really good stocks to research and look into, because you always want to do your due diligence, go look up an ETF. And ETFs are always going to have the best of the best in that asset class or in that group in them. So if I looked up an ETF right now for technology, if I looked up an ETF for technology right now, I could bet you that Apple, Google, Amazon are probably like somewhere near the top. And you can go to ETF. Actually, this is an even better one. ETFDB. So you can go to ETF database and you can actually look at ETFs by type. You can look at all the popular ETFs. So this is like for those people who are trying to get into stocks, they don't know what to buy, they don't really know how to pick them, but they want to pick good stuff. And let's see, let's do. Oh, this is my favorite. Let's do power cues. Okay. So go to holding. So if you just click one, click what you want, and then go to holdings. Holdings is going to tell you what that ETF actually has in it. So power cues is one of my favorites because it has a really good mixture of mega cap, like the really big companies, and then the slightly smaller companies from that, which would be like the large cap companies. And these are companies that have over like $2 billion in revenue. And then it has a few that have a little bit less than 2 billion, but it's a good, healthy mixture. So if you go to holdings and look at like the top 5 companies that are in that ETF, you're more than likely going to find a really good growth stock in that top 5. And you can pick one and go with it as far as researching it. Pick it, go and research it and find out if it's a company that fits your ideals, fits what you want to do with your portfolio. And so for me, I own all those top 5. And maybe a couple of the other ones. But we can even go back to the ETF list and look at oil. So oil is another one. Right now, if you're trying to figure out, I want to get into oil, I really don't know how, I need help. This is a really good list here. So US oil fund, you can go here and go to their holdings, and it's pretty much WTI. And so what you would essentially be doing with USO fund is actually owning oil. So like the way you buy it in forex, you would actually just be owning it as a stock. So I wanted to show you guys that because I know I talked to you guys. I showed you guys FinViz last week. I wanted to show you guys ETFDB this week because it's really simple. It's easy to go through and pick stocks whenever you have some of these tools at your disposal. And so, does anybody have any questions about anything that I've gone over, anything that I went over last week? And then who actually picked their stock last week? So I hope some of y'all are typing. So I'm gonna wait a few minutes, but I wanted to show you this Spider ETF here. The top 5 and this one are almost the same as power cues. So if you're looking for good stocks to buy and ones that are going to help you with growth over time, either owning this ETF, you can buy it on the stock market just like you would buy a stock. You would just type in the ticker SPY. You can find this one. Power Qs is QQQ. And if you want to own the stocks individually, you can actually just come in and pick, one, research it, and then go with that one if it fits you. Okay. So Joseph, you said you picked Occidental. So why did you pick Occidental?
I got you unmuted, bro.
Nice wave since oil is changing. Okay. So Occidental is a good company now to invest in. One thing I can say about them is that their management structure has changed a lot since let's say the end of 2018, the middle of 2019. So one reason why I'm actually glad that you picked this stock, and it's going to kind of go back to something I mentioned last week about management. So Occidental was having some issues with management. They were having some issues coming up with their financial statements to give to the SEC. And around that same time, Warren Buffett was investing into them. So Warren Buffett actually took a major hit when he first invested in Occidental, because they started having all of these issues right when he invested. So it was almost like they were having issues. They didn't want to tell anybody. Then Warren Buffett gets in and the stock price got pushed up. And then it was like, oh, Occidental stock price shot up, I think it was 10, 12%, and then sold off because then they came out with all of this news. Marathon Oil is a good one. They have earnings coming out this week. And one thing I can say about the oil companies, especially the US based oil companies, is that if they're not drilling for shale oil, eventually they will be, because it's getting harder and more expensive to drill for oil off the coast of the Gulf. Also, if they haven't already tried to find a way to get out of debt due to the collapse in oil prices last year, then they're already probably in talks with another oil company to do a merger. Marathon Oil is one of those companies that could go either way. It's not a bad company. I actually own Marathon Oil. I like it. Um, the trend in oil now is going to be up because we had this lull in oil prices. Oil prices weren't really going anywhere. They actually went negative for a while. Companies took a hit, and now they're kind of finding their way, digging their way out. One thing that's going to benefit Marathon Oil is several little pickup mergers they did in 2019, which is really going to help to kind of offset some of the issues that a lot of the other oil companies are having. And then even if Marathon Oil has to merge with another company, it's only to the benefit of the stockholders of Marathon Oil whenever that merger happens, because they're the ones that's going to get bought. And then for the stockholder, you know, your shares are going to be converted into either the new company, or if it's a partnership, you still get to keep your Marathon Oil shares. So Marathon Oil, I like it. I like both of those. Those are both really good oil companies, and companies that will do well over time, just as long as we can sustain the level in the economy that we have now. As far as oil travel, we don't need any more restrictions, no more, you know, going back to phase one, no more resurgent of COVID, none of that. And if that's the case, then oil will continue to fly. And Joseph and Carl, since you both presented stocks and I was able to talk about those, I appreciate you doing the homework, and two, I'll send you both messages when the Zoom call is over to show my appreciation. All right, so for everybody else and for everybody on the call, I want you guys to take seriously finding out what your freedom price is. Because one thing I want you guys to realize is that we're not just doing this for nothing. We're not just out here teaching you guys how to trade forex just so that you can get money. Like, where is that money going? How are you going to be able to use that money to benefit you? I'm not telling you how you should use your money, but you should know like where each dollar is going. And then for whatever your goal is, for whatever you plan to do with your money, make sure that you have and hold each dollar accountable. No money wasted. You know, we have to be more responsible and more focused with our money. So make sure that you're trying to find out, you know, what your freedom number is. If you don't know the exact cost of all of your bills, please know them. Know what your direct deposits are and what your bank withdrawals are for your bills. If you have a hard time doing that because all of your bills are coming out of multiple accounts, I suggest you get an app like Mint, or another app that will help you keep track of your bills by monitoring your accounts. And they will also help to show you where non-sufficient fund fees are going, bank fees, overdraft fees. Banks made billions of dollars in overdraft fees last year. So make sure you're not giving the banks overdraft fees and as few bank fees as possible, because they make billions off of people who don't have money. It's sad, but banks make billions and they will continue to do so. They will continue to be the predator, and they will continue to treat you like prey as long as you see yourself as prey, and treat them like the predator. Like you, when it comes to your finances, know that you are superior. You have something right now that the banks don't want you to have, which is the knowledge. You're getting the knowledge. You know how to trade forex. You're getting this knowledge and you're learning how to trade stocks. Like all of this knowledge, the banks don't want you to have, because then now they're the lion, you're the impala. They're needing to find a new way now to learn how to eat. And you're trading crypto, and they're not even in on that game. So they're upset. There are people out here making money. People are becoming millionaires every month, every week because of crypto. You're in it. Make sure that you maintain it. Make sure that you know where your dollars are going so you can continue to grow your money. All right, I'm done. I'm gonna say this one last thing and I'm gonna go. So I had to realize today, I'm gonna tell you, like I've been applying all this stuff I tell you guys, I applied to myself. I opened up an app and I looked at my bank account this morning. And at first, when I first opened the account and up until now, my interest rate was good. It was good enough to cover inflation, and it was good enough to still get me like something. So I wasn't like negative on the account. Where I checked the account, and because banks have been dropping interest rates on the back end, my interest rate dropped. And there is an app out there. It's called BlockFi. They give you like right now it's 6% interest on Bitcoin, but USD coin is 8% interest. I could shift my money to my BlockFi account and put it in USD coin, and it won't fluctuate because USD coin is a stable coin. But I'll be earning 8% interest on that same money that's right now only earning like 0.75 now. That's like actually, it will be a whole 7% interest increase. So why not shift my money to a platform where it's really going to be earning for me? So when Mr. Levels is telling you guys about putting your money into crypto and staking your coins, and we put stuff in the group chat like that, of course, research it, but find out and look at what stable coins are, because stable coins will definitely help you, especially if you can stake them and earn an interest on them. Get you a card like I have a BitPay card. You can get one for Cash App if you choose to. BlockFi is coming out with one soon. Put your money on a platform where you can still get a debit card or transfer your money relatively easy if you want to go shopping, and let your money earn money. Like I literally sat there and was like, I am going to move all this money to my BlockFi account and let it earn 8% interest. So don't feel like I'm just telling you guys stuff just to be telling you, like I'm applying this stuff too. And it's another reason why I tell you, is because I don't want you guys to go through mistakes and things that I did, or miss out on opportunities that, I could have had a chance to get in on before. But now that I know, I want you guys to know. Like, so we're going to do this together. We're all in this together. No one is more superior than the other, because we're all students here. We're all always learning. So with that being said, please make sure you find out what your freedom price is so that you can break away from your 9 to 5 if that's what you want to do. And if you love your job, still make sure you find out what your freedom price is so you can start buying back your own time. And with that being said, I'm going to turn it over to Mr. Levels so he can get started with the tip.
Woo! Woo! Saucy. Saucy, saucy, saucy. Man, if y'all want taking notes on that, I don't know what to say. It's too much sauce. Let me jump on these technicals, man. We appreciate you, Corman, man. Great job. Fire info as always. Fire info. All right, cool beans. So starting with the dollar, as always, starting out this week, I told y'all on Friday call that I wanted to see the dollar start out bearish this week. We opened up here yesterday at 5 o'clock, 5 p.m. when the market opens. Open with a gap to the downside. And you guys, remember what I told you guys about time and price and time. So if we look here around 2 o'clock, 3 o'clock, London open, we see this swing high form. We see we don't get back above this previous high. And then what does the dollar do? Slams down, sells off rapidly, right? See New York open right here. See price pulls back, give us that same pullback that London open gave us. Pull back, and continues to sell off. And then we see price just open with a gap to the downside when the market just opened for the Asian market. So I want to see if we continue to push to the downside, come down here and fill in this imbalance. We got some little buy side insufficiency, sell side insufficiency down here. So I would like to see that filled in, since the dollar couldn't get back above this previous high. We open with a gap to the downside. I wouldn't be surprised if the dollar give us a push up to fill in this gap. Maybe retest this price level here before it go ahead and slam on down to fill in this insufficiency right here. So with that being said, let's look at our currency pairs. Let's look at time and price. What time is this right here? Let me unmute y'all because we're going to get into it tonight. Y'all unmute. Yeah. What time is this right here?
Three o'clock.
Oh, bing. So in Wednesday night session, when did I tell y'all to be looking for price to give you that that opportunity to get in the market? Around what time did I tell you guys?
2:30, 3 o'clock. London
Yes.
open.
It's actually between, it usually gives you the setup between 2 and 5 a.m. But most of the time it comes around 2:45 to like 3:30. So if you look right here, this is 3 o'clock. And if you look to your left, what is it selling down into? What we call this right here. Huh?
Is that engulfing candle?
Yeah, that's an engulfing candle. And what else we call this right here?
Consolidation.
Yeah, what I call that?
Price structure.
That's right, market structure. Market structure. What I trade, price action and market structure. That's all y'all hear me say. Price action and market structure. So if you take your tool, your rectangular tool right there, market structure. It's like piecing a puzzle together, y'all. You use all these things as added confirmation to what you know that you're looking for. So you already know the market gives you this setup around London Open from 2 o'clock to 5. You see it give you this dip here. Look to your left. You see it's selling down into market structure. Look right here, market structure too. You can extend it out because the structure in these price levels do what? Stay relevant. Gives you your setup. If you miss that, you look for the same setup around New York Open. New York Open right here. What does market do? Sell down into the structure. Gives you another buying opportunity. So within this one day right here, we've had 2 buy setups. We've had 2 opportunities just off of knowing how to look for time and price action. This is a 77 pip move on Euro USD. That's damn good pips, especially on a currency pair. For one day's work. So y'all study this material that I be giving y'all, these lessons that I be giving y'all, because the mentorship that I'm in, the information is coming from a very wealthy guy, master trader, that's been trading for decades. And I'm giving y'all this information in hopes that you really take it, study it, and master it, because if you do, it's going to change your life and your family life forever. And that is a fact. But you got to put in the work. You got to put in the work. That's why I don't run my trade group like most people run their trade group and just send out signals, because that's a crutch. Because the fact of the matter is, I could get struck by lightning right now. And if you don't know, or if you don't have the knowledge that I've been giving you, then you're just going to be looking for another trade group for somebody to hand you a signal without ever obtaining the knowledge for yourself. What I focus on is education, teaching you the actual skill of reading price action and market structure. And once you have a clear understanding of that, you'll never want for money again, but you have to put in the work. It's not a game. This thing is life-changing and breaking generational curses. Yes, people are becoming millionaires every month, every day with crypto and forex. And it is attainable. It's in arm's reach. Just stay consistent. Put in the work. Y'all got a 5-year jump going on 6-year jump coming in. with my knowledge from technicals over 15 plus years with Corman fundamentals. So please take advantage of it and take it serious. So moving on to GU. Let's look and see, did we get the same setup? So
before you go on to levels with the levels, when you select a level, you look left, right? You look left.
yes, sir. You always look left to get right.
Okay, you look left to get right, and you're looking for
Market structure.
Structure that's been repeatedly hit above and below, or support and resistance in that level, zone level. That's
yeah. You're looking for market structure in the context of the understanding that you already know which direction the market is going in.
Gotcha. Sure. Okay.
So we already have an understanding that Euro USD is in an uptrend.
Bias, right? Uptrend bias. Okay. Okay.
Yes,
the two go together without any. Okay. I'm good.
yes, sir. So moving on to GBP USD. Here we go. What time is this right here? Can y'all see that?
Yeah, it's too small for me to see.
I know.
2 a.m.
2 o'clock.
Yeah, 2 a.m. Right? 2 a.m. 2 a.m. to 5 p.m. So 2 a.m. we see now. Look to your left. What we got? What we got?
You got structure.
Market.
You got market structure, baby. You got market structure, baby. Then don't it give you your draw on liquidity? Don't it come back and take out this previous high, give you your run on liquidity?
Yep. Yeah, that's a perfect hit.
And
Wow.
keeps on running. And keeps on running.
That's all right. Yeah.
Let's look at Nzd USD. Now, like I said, this ain't cookie cutter perfect. It's not 100%, but I guarantee you it's 90%. I guarantee you it's 90%. With the context of you already have an understanding of your overall trend. The context of you already understand that you're trading as a day trader, not a swing trader, not a long-term trader, not an intraday trader. You're looking to get in, catch your pips, ride price to the next market structure, and get out. So let's look at what's this? Nzd USD. So let me see. Where's okay. All right. So look, 2 a.m. 2 a.m. Look to your left. It didn't even really come down to the structure. Like sometimes it might not come all the way down to the structure. See, but if you look to the left, it's bouncing off a structure somewhere. And that structure would be right here. That structure would be right here. So you could take and draw that out, and you can see price came down, retested it. 2 a.m., 2 a.m., 3 a.m. because we on the hour chart. So 2 a.m., 3 a.m. right there, London open between that time frame, and gives you your draw on liquidity, previous high. That's how banks price the market. Let's take that off of there. Now with let's see, gold, silver, 3 a.m. gives you another, comes down at 8, and then 9 gives you that draw on liquidity, runs it up. So we see this is the 3 o'clock candle, New York open. My bad, London open. Pushes down, come back down, give you one more retest of this structure. Then gives you that run up, New York open. This next candle right here. Really this 8 o'clock candle. 8 o'clock candle, this is when they gave you that last little push down. 8 o'clock candle gave you that last little push down to give you that last retest of that structure, and then started pushing up, and then opening bell when New York opened at 9:30 within this candle right here, within this 9 o'clock candle. We go down to the 30-minute. We can see the open bell candle. Okay, there we go. So here go the opening bell candle right here. So opening bell, silver took off. And you can see the steps forming. You see this down candle, and then what we got after that, an engulfing candle. And then what we got after that, a down candle forming another step, and then what we got after that, opening bell, shoots up, draw on liquidity. Liquidity is over here. The most relevant high that hasn't been broken. And it's that one. Draw on liquidity. Boom. Set up perfect. Gold. $3 a.m. Give you that pullback, 3 a.m. Pops up a little bit, give you another pullback. Respects the structure. Don't break back below it. 9 o'clock, opening bell. Pops up. Beautiful. Let's look at oil. Because I think I told y'all I wanted to see oil come down and fill in this imbalance. Right here. And respect this structure right here. And then pop up with all the fundamental news that Corman gave us and everything that's going on right now that we expected order pop up right there, y'all better stop playing. Changing lives out here. Y'all better stop playing. U30. We opened up yesterday. Right here. We seen this wick up right here. Come back up into this engulfing candle right here. This wick up. Respected this engulfing candle. Didn't break back above this high. Sold off. Then came back up. Retested it one more time. Slammed down from when the market opened yesterday at 5 p.m. on up. But look at here. Look what happened here now. 3 a.m. 3 a.m. Structure's kind of choppy over here. But it's all good. Most relevant structure. Most relevant structure. Right here. Boom, boom, boom. Where you see all these wicks coming down into and respected. Boom. Wick right here respected. Wick right there respected. Wick right there respected. Wick right here respected. Wick right here respected. So seen the market open up yesterday evening, 5 p.m. Sell off. Gets down here in our setup, time and price setup zone. 3 o'clock right there. Look, boom. Spiking. Prices holding. Push it up. You had a lot of people short U30 right here thinking because it opened up like this at 5 and gave us that good sell off. They got a lot of people interested, a lot of people intrigued. And then when we seen this little pullback right here, they seen this engulfing candle. And every retail trader's mind, they like sell. And they did go in profit for a little bit. But look what happened at our optimal trade entry for the draw on liquidity. Right here, we get the setup at 3 off of the structure. Price moves up, come back down. Price moves up for the fake out for the sellers. Comes back down, holds price again, and then look what happened. New York opening bell. Price shot away from here. Came back, draw on all liquidity over here. Draw on liquidity, draw on liquidity, draw on liquidity, draw on liquidity. And now banks are taking profit. When you know, you know. So who did homework? Who marked up their charts with their annotations on there?
I got mine.
Let me check it out. Share your screen with us, brother. Share your screen with us.
give me a sec. Let me get to it on my laptop because I'm on my phone. So I don't know. Or maybe I can get to it on my phone. Hold on.
While he's doing that, a question. You stayed on the 1 hour. You don't go down to lower time frames.